Welcome to the Fear and Greed Afternoon Report for Thursday, the 20th of October, 2022. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed down 1% today to 6,730 points, led lower by the tech stocks. Materials, healthcare and utility stocks also did poorly, while energy companies soared thanks to quarterly reports from Woodside and Santos. More of that shortly. About 80% of the stocks on the top 200 went backwards. Fortescue, BHP and Rio Tinto all underperformed the market, as did CSL. Macquarie Group fell more than 3%, while the big 4 banks were mixed. Also out today was labour force figures from the Australian Bureau of Statistics. It showed the unemployment rate last month at 3.5%, near 50-year lows. Story number 2, plenty of corporate news around today. Woodside Energy has lifted its production outlook following a record high in sales in the September quarter. Woodside sold more than $9 billion worth of oil and gas during the 3 months to the end of September. Incredible, $9 billion. Now that includes a full contribution from the BHP oil business, which Woodside bought back in June. Overall, Woodside received an average price for its output of $102 per barrel of oil equivalent. That's high. It was a big quarter for Australia's largest energy player, no doubt about that. CEO Meg O'Neill said the result shows that Woodside is delivering safe, reliable energy from more diverse sources. Woodside is investing in new LNG projects as well as hydrogen and carbon capture projects. Its share price rose more than 6% today. And fellow energy giant Santos also released a strong set of quarterly numbers. Its share price rose 2% after it posted record sales for the September quarter of $3.5 billion. For the 9 months this year, sales are up 86% to nearly $10 billion. Now, that number's been boosted by last December's purchase of Oil Search, which is a Papua New Guinea-based group. Story number 3, let's just keep that corporate news flowing. So much going on. Gold Digger Evolution Mining fell 7% today after flagging its production would ease for the remainder of 2023. Fellow digger Silver Lake's share price fell 4% after saying ore reserves had increased by 17%. Link Group dropped 1.2% following news it was seeking to sell its troublesome British business Link Fund Solutions. Fund manager and annuities business Challenger will sell its licensed bank to New Zealand's Heartland Group for $36 million. Its share price jumped nearly 5%. And Vitamins Group Blackmore's share price fell 3.5% after it told investors that it had raised the price of its products by up to 8% as it looks to absorb inflationary pressures. Story number 4, the Aussie dollar is struggling after the ever so slightly disappointing jobs numbers this morning. The local currency fell against the US dollar. It's currently around 62.6 US cents. Commonwealth Bank today put out a note forecasting the currency to fall to 59 US cents by early next year on the back of a strong US dollar and weaker commodity prices. And finally, story number 5. Nowadays, one of the most watched companies on Wall Street is Tesla, and its quarterly earnings this morning disappointed. Revenue came in below expectations. It was still $21 billion for the quarter, and that was enough to send Tesla's share price down 4%. It's actually up 44% since the start of the year. But investors seem less worried about the higher raw material costs, supply chain issues, a rising US dollar, and difficulties opening up new facilities. And they're more focused on Elon Musk's bumbling effort to buy or not buy Twitter. Mr. Musk himself was very upbeat about Tesla, saying it looks like the company will have an epic end of year. That's it for the afternoon report for Thursday, the 20th of October, 2022. Michael Thompson and I will be back tomorrow morning with a Friday edition of Fear and Greed. I'm Sean Aylmer. Enjoy your evening.